Here's something that will quietly rearrange everything you thought you knew. You have used money every single day of your adult life, and you have almost no idea how it actually works. Not the textbook version. Not the medium of exchange, store of value definition they handed you in school and called financial education. The real mechanics. The invisible architecture running underneath every paycheck, every purchase, every sleepless night you've spent wondering why you're working this hard and still feel this far behind. And here's what nobody tells you. The reason this was never explained isn't because it's too complicated. It's because the system runs more smoothly when most people don't ask questions about it. Stay with me. Because by the end of this, you're not just going to understand how money works. You're going to see exactly where you fit inside it. And that changes everything. Let's start with the question nobody actually answers. What is money? You've said the word 1,000 times without thinking about it. It's what you earn. It's what you spend. It's what you never seem to have enough of no matter how hard you work. But here's the definition that never makes it into any curriculum. Money is a story. That's it. A collectively agreed upon fiction. A shared hallucination that billions of people participate in simultaneously without ever voting on it. The paper in your wallet has no inherent value. It's not backed by gold. Not backed by any physical resource. It is backed entirely by belief. The moment enough people stop believing the story, the value disappears. Not slowly. Instantly. Think about what that means for you personally. When your paycheck hits your account, you haven't received wealth. You've received a promise. A digital IOU from a system that holds its value only as long as everyone keeps agreeing it does. Money isn't real. Debt is. And that single asymmetry is the foundation of everything that follows. Now let me show you how this actually plays out in someone's real life. Meet Sarah, 31 years old. Marketing coordinator. Makes decent money, pays her bills on time, considers herself reasonably responsible. She has a car loan, a credit card she clears most of every month, and a savings account she's been meaning to grow for about 4 years now. Sarah isn't reckless. Sarah isn't financially illiterate. Sarah is exactly what the system was designed to produce. Busy enough to keep spending. Comfortable enough not to question anything. And just financially stretched enough that taking a real risk, starting something, leaving something, building something, never quite feels possible. Sarah is most of us. And what happened to Sarah didn't start with her choices. It started long before she ever opened a bank account. Here's how the machine actually works. When you deposit money into a bank, something happens that most people would find deeply uncomfortable if they understood it fully. The bank does not hold your money waiting for you to ask for it back. It loans most of it out. Almost immediately. This is called fractional reserve lending. Banks are required to keep only a small fraction of deposits in actual reserve. Everything else becomes loans. But here's the part that reframes everything. The money those banks lend out doesn't come from existing deposits. It is created at the moment of approval. Digitally. From nothing. Banks aren't middlemen shuffling existing money between savers and borrowers. They are generators. They manufacture currency through the act of lending itself. You don't use money. Money uses you. And it arrives into the world already wearing a debt around its neck. Now here's what should stop you cold. That newly created money comes with interest attached. If a bank generates $1 million in loans at 5% interest, it adds $1 million to the economy. But it simultaneously creates demand for $1,050,000 to exist, just to repay it. Where does the extra $50,000 come from? More loans. More debt. More newly manufactured money with its own interest requirements chasing it. This isn't a flaw. This is the design. The system is structurally dependent on perpetual debt growth. It doesn't want you debt-free. A debt-free population isn't financial freedom. To this machine, it's a malfunction. The numbers reflect this perfectly. The average household now carries over $150,000 in combined debt. The national debt has surpassed $37 trillion. And the loudest cultural narrative is still that individuals are simply bad with money. They're not bad with money. They're losing a game where the rules were written before they were born. But here's where it shifts from economic to psychological. Because even if you understood all of this, the system has a second layer. One that bypasses logic entirely and goes straight for your identity. What has money come to mean in your world? It's not just survival anymore. It's signal. The neighborhood. The car. The phone that costs more than some people's rent. The vacation posted before you finished packing. Money stopped being a tool and became the primary language of belonging, of worth, of proof. And you didn't choose that hunger. It was cultivated. Decades of advertising, social architecture, and cultural reinforcement built a craving for things that signal arrival. And then, with perfect timing, the financial industry offered to let you have those things right now, before you could actually afford them. That's the real product credit sells. Not money. The feeling of having made it. Delivered today. Build to a future version of you who hasn't agreed to anything yet. The system doesn't need you poor. It needs you predictable. A person servicing a mortgage, a car payment, and revolving credit card balances is an extraordinarily predictable person. They cannot quit the thing that's grinding them down. Cannot take the risk they've been thinking about for 3 years. Cannot say no to income they depend on. The obligations don't pause. The interest doesn't breathe. Debt doesn't just cost money. It costs options. It converts people who could be making bold decisions into people who are managing obligations. And a person managing obligations is a person who stays in their lane. The complexity of financial products reinforces this perfectly. Overdraft structures built to maximize fee extraction. Interest rates buried in language designed not to be read. Minimum payment calculations engineered so you'll still be paying for something years after you've forgotten you bought it. When a product is confusing and you make a costly mistake with it, you feel stupid. When you feel stupid, the system benefits. Because you don't get angry at the structure. You get angry at yourself. And self-directed frustration has never changed a single external condition. Now let me show you the other side of the ledger. Back to Sarah for a second. Sarah's neighbor, Marcus, is 34. From the outside, his life doesn't look dramatically different. But Marcus learned one thing Sarah never did. The same tools that trap most people can be used completely differently. Marcus borrowed money last year. Not for a car. For a rental property. His debt went up. But so did his assets, and now that property generates monthly income that services the loan and then some. The interest he pays is structured as a deductible expense. He's building equity with pre-tax dollars while Sarah services consumer debt with money the government already taxed. Same tool. Completely different outcome. Not luck. Not privilege. Framework. This is the distinction that rewires your entire understanding of how capital works. Most people borrow to consume. The purchase happens, the experience fades, and the debt remains as the only lasting artifact. Net worth drops. Financially sophisticated people borrow to acquire things that produce income. Debt increases, yes. But the asset purchased increases faster. And compound growth handles the rest quietly, in the background, without asking for anything except time and consistency. $10,000 at 10% annually, untouched for 40 years, becomes nearly $500,000. Not through genius. Through uninterrupted compounding. But that process requires one thing the debt cycle systematically prevents. Capital that isn't being redirected toward interest payments every month. Every dollar lost to debt service is a dollar not compounding. Every year spent escaping consumer obligations is a year the clock isn't running. The arithmetic was never designed to be neutral. So, what do you actually do with this? Here's the honest answer, not the comfortable one. This knowledge is not a shortcut. There's no revelation here that dissolves decades of structural disadvantage overnight. Anyone selling you that is using the exact psychological mechanisms described in this video to move money from your account into theirs. What this does is something more durable. It ends the case you've been making against yourself. You are not bad with money. You are a person navigating a system that runs more efficiently when most participants don't fully understand it. That is not an excuse for passivity. It is an accurate diagnosis. And accurate diagnoses lead somewhere useful in a way that shame never does. Once you see the game clearly, the choices available to you change. You notice when consumption is being sold to you as identity. You start asking whether debt you're considering is attached to something that will grow or something that will fade. You look at deliberately confusing financial products not as proof of your inadequacy, but as a signal that the structure was built to benefit someone other than you. Sarah can't rewind time. But she can stop playing by rules she never agreed to. She can start making the next decision from understanding instead of habit. So can you. The system told you that wealth is about what you own. But the people who architected the system always knew it was about what you owe. Because what you owe determines where you show up, what you'll accept, and how quietly you'll do it. The goal isn't to become extraordinary. It's to become unmanageable. To build a life where your decisions come from clarity rather than desperation. Where money is a tool you direct instead of a current that carries you somewhere you didn't choose. You were never supposed to fully understand this game. But now you do. And that changes which move you make next. If this shifted something for you, if it confirmed something you already suspected, or if it made you think of someone who needs to hear it, drop it in the comments. Tell me where you are in this. Because the most powerful thing that happens in these conversations isn't just the learning. It's the moment you realize you're not alone in it. New episodes every week. Each one another piece of the map. Don't miss the next one.